Economic data out this week showed that the economy is still resilient but faces headwinds. And there was modest improvement in the sales of new vehicles in January, and a trade surplus of 12 billion rand was recorded in December, larger than the forecast of 6 billion rand, and this after a 1.7 billion rand deficit in November.
Data from the Department of Trade and Industry shows that new vehicle sales grew by 3.7% year-on-year to just over 50,300 units. Export sales of new motor vehicles, however, declined. NAMSA says this was principally due to BMW's refurbishment work at one of its major plants in preparation for a new model. Economists say vehicle sales will likely improve this year due to the very low base in 2016. Sales will likely also be boosted by some expected increase in confidence as well as lower inflation and interest rates later in the year. A larger trade surplus than expected was recorded in December. Over the month, imports fell sharply by close to 20%, while exports declined by just over 6%.
This is probably largely due to the somewhat better commodity prices on the world markets for those things that we sell. And also, of course, I think that we've had a fairly competitive exchange rate. And I think those twin factors have actually helped to boost exports. The downside is that, of course, imports have fallen. Now, you may say, well, hurrah, but
yes.
The fact is, it means that many business people are not importing any equipment, they're not investing. So, in fact, the fall in imports, to some extent, reflects the weak economy. So it's two sides of a coin. But I think on the balance, we've got to be very pleased that over the past 2 years, our exports have grown by something like 22%. And that's good news.
The ABSA PMI survey shows that the manufacturing sector made a stronger start to the year after a contraction in the second half of last year. The PMI rose to 50.9 in January from 46.3 points in December, marking the first reading above the neutral 50 points mark in 5 months. Reserve Bank data showed that the private sector credit extension rose by 5.1% year-on-year in December, compared to the 4.6% year-on-year in November. Credit extension was supported by loan take-up from corporates, which increased by 9.1% year-on-year. Economists say the slowdown in corporate credit growth reflects a weak economic growth environment, low investment rates, and depressed business confidence.
Many households and consumers are beginning to pick up the message that in the budget, which comes at the end of this month, there may be increased taxes. That's going to also squeeze some of the disposable income, or might even perhaps put up some prices if they're indirect taxes. So I think that element of uncertainty among consumers explains why they're being very cautious about household debt and are wanting to wind it down, or at least not take out extra debt.
The dollar weakened after the U.S. Federal Reserve gave no sign of accelerating rate hikes. As a result, the rand was earlier trading about 1% stronger against the greenback. Next week, Stats SA will release mining and manufacturing data for December 2016. Gloria Sefako, SABC News, Johannesburg.